After peaking in November of 2023, coming off a little bit, and then peaking again in January 2024, months of housing inventory across the Greater Toronto Area came off 37% in the 5 weeks from the most recent peak. This past week, that number inched up ever so slightly, and it begs the question, is this the start of a new trend with months of inventory going to the moon, or is it just a blip? Hey everybody, and welcome back to the channel. It's me, Rob Marsiglio, sales representative with Keller Williams Referred Urban Realty out here in Durham Region, helping the great people of this part of the province, doing my best to bring you weekly content on this channel. Today, we are going to dive into what is my favorite number, if you haven't tuned into this channel already, months of inventory. What is it doing? Do a really deep dive into whether this little increase we saw this past week is just a blip or the start of a new trend. Here's the peak that we talked about in November at 4.79 months of inventory. It then dropped off, peaked again in January at 4.15. And then here's that 37% drop in 5 straight weeks down to 2.56 months of inventory. Then this most recent dot, which I don't have labeled, is back up to 2.63 months of inventory. And when you break it down by region, you can see everybody's followed roughly the same trend, kind of from the absolute lows that we saw through the spring market of last year, all peaking roughly in November, showing that other second peak in January, falling off until now. And then this past week, it's really 3 out of the 6 markets that have kind of shown that little bump: the Toronto condo market, Peel region, this black dotted line, and Durham region, this orange dotted line. So the question is this little jump just a blip, or is it a trend? Looking at months of inventory historically across the Toronto Regional Real Estate Board, this is pulled from their Market Watch. It does look like it could just be a little bit of a blip. We can see that usually peak MOI, or months of inventory, occurs in January. This is kind of using data going back to 2008 through 2023. Falls off the most dramatically into February, but continues falling into March. And March is usually when you see the tightest market conditions across the Greater Toronto Area. MOI then slowly relaxes until it builds to a kind of second peak in September, gets a little tighter through October, and then back to the December, January kind of slow markets that we're used to. My explanation for this little blip is more than likely the Family Day long weekend that we just celebrated in Ontario this past weekend. No sales reported on the Monday because many real estate offices are closed, so we're not reporting sales. And that little sales blip probably caused this months of inventory increase. Quick reminder, months of inventory is calculated by taking the total active number of listings in a region at a given time and dividing that number by the total number of sales in that region over the previous 30 days. Just to highlight what I mean by that long weekend effect, this red arrow points to the little jump that we did see from 2.56 months of inventory up to 2.63. And again, that's as a result, I think, of the Family Day long weekend. It's a similar jump to what we saw last year. This is the Easter long weekend, where we saw a little bit of a jump in months of inventory before its downward trend continued and bottomed out through the spring, really, until things started climbing all the way up to that peak that we talked about earlier in the video in November. Here's the same timeline, but the 30-day rate of sales going back to the beginning of January 2023. And you can see the black arrow points to this kind of slowdown in sales that we saw over the Easter long weekend last year. Similar pattern to what we saw over the Family Day weekend this year. Now, I dove into the specifics of this kind of drop off in sales a little more in depth in my Substack this week. That's linked down in the comments of this video. Here's a little excerpt about what sales have looked like in the weeks approaching Family Day weekend. From January 29th to Feb 4th, we had just over 1,100 sales, and that jumped up to 1,300-ish sales for the following 2 weeks. Then with Family Day included, we dropped down to just over 1,200 sales. So about 100 sales less reported in the Family Day week than in the 2 previous weeks. And as I go on to note here, if the week of February 26th to March 3rd sees more than that 1,145 sales reported, that 30-day rate of sales will pick up and put some downward pressure on the MOI. So we know that in the short term, at least based on this week's data, replacing a slower sales week from the end of January, beginning of February with a busier sales week, the 30-day rate of sales should increase. But what is it going to look like going forward? Will we see kind of continued downward pressure? Will active listings build up quicker than the rate of sales builds up? That's what I want to get onto for the rest of this video. The first thing, in my opinion, that will have an impact on buyer confidence going forward is this schedule here. And we can see that on March 6th, so just next week, the Bank of Canada will make another interest rate announcement. Now, even though variable rates are significantly higher than fixed rates right now, and a cut or a hold to the Bank of Canada overnight rate is not going to bring variable rates down in line with fixed rates, it does definitely affect buyer confidence and consumer sentiment in the Canadian real estate market, the GTA real estate market. So If there's a hold, I'd imagine that, buyers will still have this confidence in the market. You could see a bit of increased activity as a result of a hold, which I think is projected to come next week. If things are cut rightly or wrongly, probably wrongly, but buyer confidence at that very point in time will probably be pretty strong, and we might see a stronger reaction in the market. So again, I do think that the decision the Bank of Canada makes next week is going to have an effect one way or another, and call it the kind of short to medium term, the next few months of sales activity. It's harder to get a read on it from right here, but you can see that since the last Bank of Canada hold, which was on January 26th, offer activity across the GTA did increase. This is on a daily basis going back to the beginning of the year. I see the issue here with this one is that, we're going from the January to the February market. Things always do pick up. I don't want to put too much emphasis on that rate hold, but there was a pretty serious uptick. If they had a hiked on January 26th, I think that we would have seen offer numbers stay a little more suppressed and similar to what we saw in January. Now, the same thing can be seen with showings after the rate pause at the end of January. We did see increased showing activity relative to January. Again, same argument can be made. Things get busier in February in the Greater Toronto Area real estate market than they do in January. We did see the peak in showing activity in the first weekend of February. We haven't seen a kind of weekend quite that busy since. So this could be a case, that maybe sales activity doesn't come back as strongly going forward. But I guess we won't know until following that March 6th announcement what consumers do, how they respond, how they react to whatever TIFF and Co. does. So that's what's going to drive that buyer sentiment going forward. I think the Bank of Canada rate announcement is going to have a pretty big impact. What about the other side of that months of inventory equation, though, the actual active inventory? And here the trend's a little more clear. All markets have shown a bit of an acceleration in growth of active listings. Again, not abnormal for this time of year. Again, if we zoom out and look at the active inventory picture right across the GTA, sorry, Halton region, not included again, but you can see that where we're sitting now at just shy of, call it 12,000 active listings, is where we were in kind of the middle of June last year. And what you can also see is that when inventory did start to grow last year, it kind of stayed pretty steady until at least the summertime where it flattened out a bit, and then people tried to capitalize on a fall market that never really materialized. So do we see a similar trend this year where, we've started to see that active inventory increase? Does it just increase from here? This is the case, I would say, for months of inventory continuing to grow, is that these active listings continue to stack and build, get back up to those peak levels that we saw last October, and sales are just not able to keep up. Even if active inventory does continue to grow and months of inventory is pushed up, not every single segment of the market is going to experience the same things. First of all, here's a breakdown of active listings by days on market. And you can see that we have a lot of stale listings, this red line, that are still on the market, about 5,000, about 5,500. So call it just shy of half of our listings. I think it's about 43% have been on the market for 30 plus days. So how serious really are those sellers? A lot of the kind of tightness in the market is going to be in these newer listings that we see coming out. And we also have to remember, as I pointed out on X, that included in these active listings are properties that are sold conditionally already, which means they are under contract. They're just not firm sales yet. But once they do firm up, they're removed from that active inventory pile and added to the kind of 30-day rate of sale pile. So for every one sold conditional property that goes firm, you have one more sale reported and one active listing removed from the table. And lastly, depending on the price bracket that you are looking in, the months of inventory picture is very different. Right across the Greater Toronto Area, Halton, you're back in here this time. Under $2 million, we are seeing less than 3 months of inventory. That's that thick orange line. You can see this kind of dotted, faded orange line is where we were at the beginning of February. Here's where we're at as of February 26th. Again, months of inventory under 3. Technically, we're back in a seller's market. Anywhere under $2 million. If you're looking over $2 million, it's a bit of a different story. You get over 4 months of inventory as soon as you eclipse that $2.5 million mark. And lucky you, if you're looking at properties over $4 million, you have 15.4 months of inventory to choose from. So is this a blip? At this point, probably caused by the long weekend is my opinion, but active listings are starting to pick up at a quicker clip and earlier in the year than we did see last year. So this spring market might be a little looser than we saw last year, meaning maybe not quite as much upward movement on prices. I know that the February jump that's going to be reported is pretty significant, but again, relatively tight market, the tightest market that we've seen to this point of the year. So that's not much of a surprise. Let's see what the Bank of Canada does on March 6th. That's going to definitely affect buyer confidence, consumer confidence, rightly or wrongly, which will affect our 30-day rate of sales. And at that point, we'll be able to make a better call as to the future of the Greater Toronto Area real estate market. Before I do go, something a little different. I want to thank you all, anybody who's watching this video that has subscribed to the channel. We hit 1,000 subscribers just this past week. Again, to me, that just means that there's 1,000 people at least that have gotten some value out of these videos, and that's what I do this for. I want to keep you up to date with the most recent data that I can provide you kind of a little more frequently than what you get from the Toronto Regional Real Estate Board and their Market Watch. If you are getting value and you haven't subscribed yet, please consider. I do something like this every single week. And again, if you think you know somebody who would get some value out of these videos, feel free to share the channel with them as well. Thank you for watching till the end of another video. Until we speak again next time, please stay safe and cheers.